right, welcome folks to the Short Vol Show Live. My name is David Lincoln, and I'm here to give you an update on the position and what's going on, all that stuff, all that good stuff. So yesterday, as we left, I was short one UVXY call, the August front week August 31 call, which I sold at $1.78. I almost immediately after that decided to become more aggressive with the position. And part of the reason for that was just looking at the term structure. If we look at the term structure, and we just expired, expiration just happened at 8:30 Eastern time. And if you look at the term structure before that, however, you can see it's very, very flat. And there is the potential here, at least in my mind, for us to go like a lot lower as the new front month future September curls down into more of a contango situation. Now, right now, the roll yield is almost $2, right, which isn't inconceivably wide, but it's pretty wide in recent memory right after expiration to have $2 between spot and the front month future. So and I'm pulling up my little pen here just to illustrate. I've done this before, but just to refresh your memory, this area between spot and the future is kind of like our area of potential for edge to the downside. This area is the wider it is, the more potential we have for this to really kind of roll lower. And I expect as this future comes online and is the front month future, and that people start performing a roll, or various funds have to buy this second month future and sell this first month future, that this starts to steepen this curve here between the two, and that creates more contango for one thing, but also just this future, $2, almost $2 of difference between this future and spot there's going to become more and more pressure for this future to push down towards spot. As long as either spot stays where it is or moves lower, there's going to be a lot of pressure on this future to push down. So what I did was I decided, well, I'm going to try to get the maximum short delta out of this account, because being short one call only made us, our delta was only short like 50 something. Right, because it's an at-the-money call. So the delta of one at-the-money call is going to be about 50 deltas. So if we were to model this once again, you saw one August 31 call. It's going to give you about, and even here it's showing even less. It's showing about a... that's because we're actually lower now. We're down to 29. So 31 is not at the money anymore. So it's showing only short 44 deltas, being short one call. I pretty rapidly, after going off the air yesterday, decided that I wanted to add to the position. So what did I do? I bought this put spread, the October 28-24 put spread. Here I am there. And I paid $2 and a penny for this put spread. So you can see my trade right behind me there. But the 18 October 28-24 put spread paid $2.01. So basically $4 put spread, I paid $2. So if it does come in, it would double the account. And UVXY, it appears it's going to open down $2. So it seems like it was a good deal. The now our delta currently in UVXY is short 349 deltas. So we've got a much more aggressive short on than we had before I traded yesterday. So we'll see what happens. Things seem to be going our way at the moment here. Expiration just occurred in UVXY. If you didn't know exactly when expiration was, you could just look at the future, which just ended trading, which was the August future, and you can see, excuse me, you can see it stopped trading right around 8:30. And now we move on to a new front month, which is September future. And as I said, I anticipate the curve kind of curling down here when we look at the term structure, and the rate of contango between SEP and futures increasing pretty rapidly over the next few days. So currently, VIX Central showing contango 2.25%. I see that increasing over the next couple of days. So we'll have to wait and see what happens. But it looks like vol could really cave in here potentially. I just was watching a Bloomberg. Video about how well vol could really pick up here, and I was thinking to myself, well, what if they're completely wrong? Will they come on and say that they don't know what they're talking about? But of course they wouldn't. And everybody can speculate, and everybody's going to be wrong at times. I certainly am wrong at times. Here's the article that I'm referring to. It says, markets face risk of episodic volatility. And it's funny, as volatility crashes, you have analysts coming on and warning about volatility. But, that's why maybe the mainstream media and Bloomberg is not always right, and you should explore other sources of information, possibly. As I get out of the way to show you this article here. This lady's talking about, the S&P, it could fall below 2,700, and then volatility is going to explode. Well, for the moment, at least, that's not happening, and volatility is getting crushed. It would fit us very well if volatility continues to get crushed, but we'll have to wait and see what happens. I am very excited about the position today, seeing as I am incredibly short the VIX, and we are going lower. So we'll see if that trend continues and if the position works out for us or not. Either way, you get to see a real position, and it's completely transparent what's going on here. If we want to look at the P&L once again, where we are right now, that's kind of where we are right now, net liquidity. And we're almost completely committed to this position. You can see our option buying power is very small compared with our liquidity. That meaning that all of our buying power is committed to this short position via the October 28-24 put spread. So ideally, the best thing that would happen for us would be volatility completely just collapses and UVXY goes to like 22. I don't know if that's going to happen. And certainly a tweet could come out in the next 5 minutes that skyrocketed the VIX again. But for now, VIX 1571. We haven't seen the 15 handle in some time. Let's take a look and see how long it's actually been for the 15 handle here. Okay, so 15 handle back in August. I guess it wasn't too long ago, August 1st. So 20 days ago we saw the 15 handle, and there let me show you what things look like right now it looks like we're just coming off that spike. Look, here is that spike first week in August, and it looks like we might just be coming back down off the mountain here, but we'll have to wait and see, of course, what's going on. But first time we've seen 15 in a couple weeks. Geez, doesn't it seem like a lot longer time that we've been in a spike than just a couple weeks? It was just the beginning of August, but usually a spike only lasts a day or two. This one's lasted 3 weeks, but it looks like we might be coming off that spike as expiration just happened in the VIX, and September is the new front month as of 8:30. Just a little bit more than a half an hour ago. So this is an exciting time for VIX traders as expiration has occurred. Now, people talk about, well, it's not that crucial to follow expiration because we know that the August future that just expired becomes moot in most of these ETPs because we've rebalanced away from August. By the time expiration happens, most the VIX ETPs hold no August futures, and so exactly where the August future closes doesn't matter. However, expiration is a time of change in the VIX, and at least I personally feel like there's more volatility in the term structure rate on expiration than there is at other times, and more potential for moves in UVXY based on term structure moves more than, most of the time what moves UVXY, and the main factor actually all the time that moves UVXY is the VIX. However, term structure adjustment and stuff has more of a factor right around expiration than it is the rest of the cycle, it seems, a lot of the time. I know some people will debate that with me. However, we see with the rally continuing, if we look at the E-minis here, we're all, in the end, everything's based around and derived from the SPX here. And if we look at the E-minis, we can see that we're going to hit this kind of plateau here for the fourth time and see if we can break through it. Okay, so we've got 1, 2, 3, 4. Now, Elliott Wave guys out there maybe could do this more justice than I can right here, but it looks like we've hit this level here a few, more than once. Look, this level right here, and we'll see if we can break through it today or not. It looks like we bounced off it a couple times recently. Let's back up the chart even more here, and you can see this level we keep approaching. Let's see if we can get through it. If we can pass to the upside of this level, it looks like the next spot really is the all-time high, and that would put volatility even lower. So volatility really coming in right now. Term structure back in a kind of quote-unquote normal state, and it looks like the only question is does this level cause more problems as we get up there? It looks like it's like 29.35, 29.28. The highest we got is 29.42. Can we break 29.42 and move higher? That seems to be the next question here. But as I said, in the meantime, volatility crashing. Let's see if the VVIX gets below 100 today, and we will maintain this short as we move forward, looking for that move in UVXY back towards the lows. We'll see if it happens. Stay tuned. And thanks for watching. Have a great day trading today, folks.